Thanks again for coming on the live show. So today, hello Gary Nagel. So you can see there's the Glencore CEO here in the chat. I mean, obviously, it needs a little bit of lecture about the mining business. So this is nice that he came here. Hello Eli, hello Michaela. So okay, so in today's broadcast, so I'm going to ask Leon to come over, and then we are going to review the financial modeling of a mine that we think that we are going to, I mean, or maybe not, that we think that we are going to invest. This is a lithium mine in Nigeria. So Leon put all the numbers that the guy gave us on an Excel sheet, and he's going to walk us through the Excel. To be completely honest, I haven't really looked at it, so you can have like a fresh reaction from my part. So first, we are going to check the Excel, discuss about the numbers, and then with Leon, we are going to discuss really live what we are going to do with this mine, what would make sense or not. So I'm going to ask him to come on the show. Yeah. Up, here we go. Hello, Leon.
Hey, Damien. Hi.
So
hello, everybody.
You are live. We have like 6 viewers, so this is a big time for you.
Can you? Yeah, live it's something new for me, but together we will make it.
Yeah, definitely. Okay, so I'm going to share the screen. Up. Hold on a second. Path. Okay, and I'm going to make it, I think, I should make it a little bit bigger. Here we go. And yes, as I forgot to say as an introduction, we are going to take your questions afterward. No problem. Let's go. So, okay. Leon, walk us through your Excel sheet.
Yeah. Okay, so first of all, this is of course not a proper financial model. This is just for us to get a first insight and see if it's worth having a deeper dive into it, or if it's shit and we can put it to the side. So what it is basically all about, the assumption is first of all that we have to invest $100,000 or it's in Nigeria, so 60 million NGN. You see it in the first line. And
yeah, I'm going to stop you right now. Is it the correct conversing? It sounds weird. So is it the correct forex?
So if you use the exchange rate you can find on Google, it's not the right amount of money for US dollar. I have it marked in red, a few lines below. It's 144 actually. So it's a little bit more, to be honest, but yeah, this is the first point we're actually marking out, and all the data and all the cost positions and the quantity of mining, etc., etc. This is not data we collected. It's something we got sent by the guy who is responsible for the project. So just to cover that.
Yeah.
Right.
Yes. So all those data, so all those data are what the project owner gave us. So this is we just put everything that he gave us on the Excel sheet, and of course we need to do our due diligence afterward. But just to give you an information where it's coming from.
Yeah. Right. So this is the first point. Then starting with expenses. So first of all, the startup expenses. What does it cost to set up the entire mine? To bring everything about the engineering, construction, etc., etc. So this is actually the amount, and what I like is to calculate or to change it into a exchange rate, or in a forex we can handle a little bit more. So if I do everything in NGN, I don't have no clue what are 20.4 million NGN. I don't know. So I always will change it into US dollars. So basically, engineering. Procurement and construction, so EPC is 24.4 million yen, or about $50,000. And then you have working capital. We have to add that for total startup costs, and this is the 60 million. And if you have the exchange rate that you found on Google, it's basically $144,000. So yeah, that's a significant amount more than the 100,000 he was telling us. So this is definitely the first position to have a to have a look at. Okay, then in the second part, we are looking at, okay, now we have the startup costs. What are the costs for operating and maintaining the mine? There you have the cost position operating costs, and I divided it because it's these yearly numbers. I divided it by 12 to have a clue what are the monthly costs, and then general administrative, and there are also costs that are monthly. So again, divided by 12, and then we have the total expenses. You can see it down below, 570.4 million or 1.2 million US dollars. This is if you have it for 12 months, and if you cut it down, you see it above what it's all about. Okay, so we're working. We have now the costs the costs.
Okay, so just to make sure that everyone is following. Basically, these numbers here in a 23D, this is the cost to run the mine per month. Once the mine is up and running, so this is after the initial investment. So
yes.
am I right?
Yes. Okay. And in the next part, we are calculating with NGN again, because what he was sending us is all the numbers in revenue, expected revenue is in NGN. So to have don't to mix up the currencies. This isn't that good, or shouldn't be that good. So we are calculating with the 38 millions, which is the NGN amount for the operating of the mine. And then we see it's something like income, sales, P&L. Basically, for the income and what are the sales, what is the revenue of the mine, we have the tons sold. Again, this is what he was telling us. Month 1 and 2, we're expecting nothing to sell actually. And then we are starting month 3 to month 12. So the lifetime of the mine isn't actually that long. We're calculating with 1 year. And then we have a total revenue. It's above or underneath, sorry. And there's one aspect I have to mention in this case, because there's a split between local and export. So if we sell lithium or the product mine, if we sell it locally, it's a different price than with an exporter. And the greater the export share is, the greater is the revenue. And I like to calculate all that stuff really, really conservative, because there are many, many things often that go wrong. So I like the really shitty and really conservative calculation the most to get a view. So we have a large percentage share of local and just a small export share, just to let you know. And basically you see in line, 35, you see the revenue with the expected tons of mining. And then you calculate it by if you take it with the prices, you get the revenue. And underneath again in US dollars to get an impression, okay, about what amount we are talking here. Okay, perfect. Then and then of course we have costs. We have what are the startup costs, what are the operating costs. Now we have the revenue we will generate with the project, and then we have to see, okay, when is the break-even point? When is the self-sustainability of the mine? Does it make sense? Doesn't it make sense? How long will it take, etc., etc. So what we are basically doing is we are taking the revenue, the expenses, the cumulative expenses in this case, and then we see, okay, what is the balancing? What else do we need? When are we at our break-even point? This is not calculated accurately because it's something in between the month. If we have more detailed data, we can of course calculate it a little bit better. But in this case, just to give you a feeling, let's do 1 month, the first one. So we have 0 revenue, like already mentioned, because we have no tons sold. Expenses of 89 million, sorry. And just for you to remember, these are the startup costs plus the monthly costs, because don't forget, only because we're not selling anything doesn't mean that there are no costs of operating and maintaining. So keep that in mind. And these are the 98 millions. And in the next month, again, no revenue, unfortunately, but still the 38 million in expenses. These are the expenses we had for monthly operating. And if we add the numbers, we're 136 million, which is basically the peak of the capital we need. We have it in US dollars underneath. It's 326,985, which is basically needed to maintain and to do the project basically. And then month 3, we won't do any all the month, but just 1 month with revenue. We are calculating with 135 million in revenue. Again, expenses are the same because we break it down on the monthly basis. And cumulative, again, this is also the amount before, the 136 plus the 38. And then we have the follow-on costs. And then what we do is we calculated with the revenue, and you see in the next month with 207 million, 70 million in revenue, we have the first month with a positive delta of 192 million, which is then.
Okay, I think we've got it, but now my question is like, so what I really need to see with him is how where is this because we need to spend that amount of US dollar, but then the investment is only for that amount. So where is the rest of the money coming from? That's our first question, because we are lacking, like, basically the investment is only a third of what is going to be needed, or I'm missing something. Not really a third, right? Yeah. But so that's that. Okay, so that so this is the first point. Then also the guy is extremely. I mean, we've seen it with the mine that we're running right now. I think 2 months it's like completely crazy. I would forecast we need to do another forecast with at least 4 months with no revenue, but not the same expense, because the time to ramp up is going to take at least 4 months to get there. So, and also it's extremely. I don't think that we are going to reach those numbers again ever, to be honest. This number of production, because I mean we know how mining it is. It takes a lot of time to ramp up. So I think what we would need to do is like to say, okay, let's do for 4 months. There is no revenue. Maybe the expense is not going to be that much because we are not going to. It's not going to run at full capacity, but it needs to be at least 4 to 6 months with no revenue. Then the revenue kicks in, and maybe a bit more conservative about the volume, and to see if it would still make sense. It still makes sense, but I think so, because at the end of the day, even if we divide everything by 3, we still make a lot of money. So yes, I mean, of course, these numbers are completely. I mean, there's no fucking way in the world that it goes like this, but there might be something. I don't know. What do you think?
Yes. So, like already mentioned, these are the numbers he gave us. So what I did is a kind of a sensitivity analysis. You can see it on the second page, which is actually some playing out some scenarios. I know there's an Excel function for that, but I just wanted to make it easy for everybody. So this is basically we don't have to do all the scenarios. Just do the last one, scenario 4, the worst case. The highest expenses with lowest prices and lowest output. So what I actually did is say, okay, we are not mining that amount. Prices are getting really shitty, and the expenses are going through the roof. So this is basically the calculation. Of course, you can play a little bit with the numbers and say, okay, we have some forex losses and so on, or even double that. And even in this amount, we will do 4.968 million in revenue. Which is a delta of the normal calculation of 3.6 million. So just to get a feeling. But again, if we calculate the ROI, even if we have to put $400,000 into it, it's still an ROI of 1,242%. So still not that bad actually. And and what you can do with all this, or this is just a tip from my side. If you calculate with Excel, most of you will already should do that, but calculate it not only manually but connect the lines. So if you change your, let's say, your output or your prices, all the other numbers are changing in the calculation, and you don't have to set up everything manually. This is maybe just one point. You can play a little bit around. You can do some charts. You can see where my break even, what prices do we need, what happens if, and so on and so on.
So just to make sure, so this is the revenue worst case scenario.
Yeah.
And this is what the guy estimated, basically.
Yeah.
So, okay, even if we cut everything in half, of course, it's extremely interesting. So now, what also something that do not appear in this number is that he gave us the P&L only for a year, but actually the mine is quite big. So this mine could go for like 10 years or something like this. So that's also something that I haven't told you, but he gave us only the first, because I asked him only for the first year. So this is why, even though the ramp up takes more like, let's say, 6 months to really start to make money, this is, I mean, to be honest, this is the part that I'm really the most afraid of, and we need to really discuss with him, because let's say it takes 6 months to get it started. How much cash is he going to bleed for those 6 months? This is so this is basically it. And then yes, and then of course, even if everything is cut in half, it's still extremely interesting for us to make this deal. So
and then maybe one point, I just saw it in the chat with the taxes. Yes, we have to include the taxes, but currently I have totally no clue what are the actually taxes will be. But this is something that comes on top.
Yes, and also something else that we need to check is about the Forex exchange, because we are going to get a shitty one. So this is also something that we need. It's quite actually difficult to get US dollar out of Nigeria, but we can do it. But it's quite a shitty one. So, but still, man, I think it's quite interesting. So I think we can stop sharing. Up, here we go. And then I still think this is quite interesting, because as you can see, the two things that is quite important. Like, I think you really, I mean, he needs way more money than what he told us to make it work. He needs more money, but still, if this rocks, the return are there. So also to give you more information about this mine. So now the mine is the guy used to have miners on this property, but this was like they would call it like artisanal miner, but it was just a guy with like a pickaxe and a shovel, and I mean, like complete. I don't know if it's legal or not, but it was completely unsafe. And you know, when you find the lithium like a vein, I mean, the guy need to go to caves and so on, and then you know there's like high risk of the cave falling on them, so people die. I mean, this is a complete mess. So this is why the guy just stopped and said, look, now I want to mechanize everything to get it more professional, but I need more money. So this is basically how this deal came onto our life. Now, what I need to see with him is also what is going to be the term, because let's say we give the money. So, but what is it? Are we going to give him like a loan? No, definitely not. We want share on the mine, because if the mine runs for 10 years, I want to have money for 10 years. So this is also something that we need to discuss with him. But man, I mean, this would make sense. Yeah, Michaela, the taxes in the corporate tax is like maybe 30%, but we are not going to get tax on the corporate rate. That's something different. And also there's something that we can do is basically we can be the traders of the good. So that means that he can sell the lithium to our company, and then we merchandise and then we sell the good internationally, and then we can get the money like that. But then he needs to pay some taxes at the export, I'm pretty sure. But there is a lot of way to not. I mean, we are not going to pay the flat percentage of the normal corporate tax. It never has happened. And this is not the fact that we cheat the taxes and so on. It's just accounting doesn't work like that. But yeah, man. I mean, what do you think, Leo?
Yeah, I think it's interesting, and that we should dig a little bit deeper into it and see if we can provide us some more numbers.
Yeah, but Jude, man, this is we need to get ourselves the right numbers, because I mean, it's still his project, so he can push it up on the numbers and so on. I mean, I need to find another guy that do mining in this region and going to ask him directly the cost, because I think the costs were pretty detailed about the price of the excavator, the price of the manpowers and so on. So I just want to find someone where I can. But actually, I think I have someone where I can send him those numbers and he tell me like if it makes sense or not, because you always get to double check what the guy is giving you. And also to answer Timothy's question, can you set up an agency agreement so you invest, take the marketing? Yeah, exactly. I mean, this is mostly, this is usually how traders invest in any asset, such as a mine. Basically, they are going to put money, but they are also going to get what we call the offtake, so to market it. And so this is for your information. So let's say that a trader is going to invest in a mine. Usually, it depends the deal, but there's like 3 ways that they're going to make money. First, they're going to invest and say, look, I'm going to lend you, 10 million, and it's going to be at 9%. So as the trader is getting, pretty sure the big one are getting financed at 2% or something like this, they are making 6% spread and they are making money with that. Then they are going to say, look, we want your takeoff agreement. So each month we are going to take, 5,000 metric ton, 10,000 metric ton, or whatever is the mine, and we are going to take it at a discount. So usually you sell it at, a discount of LME price, market price minus, 2%, 3%. We want a discount at minus 4%. So there's like another way. So this is like the 2 way to make money. And then there's a third way, which is only possible when we buy something from a mine, which is where there is like a future market on it, as you can do back trade. So that means that you can set up the price as a trader in a longer time range, because there is like a fixing part when you deal with a mine. Like, let's say the price is going to be March. An average of all the trading days in March. So this is the QP. So this is how we are going to price the product. But what you can do is you can have like better term as a buyer, and you say, look, I want to be able to fix the price in March whenever I can. And then last day of March or last week of March, I'm getting the delivery. So that means that the trader, what he can do is like he fix the price after he knows where the price is. And so this is quite, I don't know if it was clear, but it's quite interesting if you can make that happen, because obviously you make a lot of money. So back pricing, exactly. Gary Nagel, he knows his stuff. In Gecko, you are considering prepayment, prefinancing type of deal if you will act as a trader. Yes, I will. I don't want to act as a trader, to be honest, because it means that I need to market the product. Or someone in the team need to market the product. It's not something that I want to do, because to be honest, there's no. It's when you do small quantity, it's really difficult to have any alphas. To sell at a better price or whatever than the market price. So my way of thinking is like, okay, look, we are just going to sell market price and then that's it. But if we need, for whatever reason, to market the product to get a US dollar out of the country, we will do that. Okay, and so the numbers are quite interesting, even if we said that it takes 6 months to invest and so on. But what my question is always, now I really don't know. So let's say that we take a part of this company, because we need to see also who is the owner of the land permit. Is it him? Is it his company? Or what is exactly the legal structure? Even though we are in Nigeria, we need to make sure that it makes the legal structure makes sense. And then what I would like to have is like royalty agreement. So, and not only for a year, for like 10 years or something like this.
Yeah. And I will do a calculation for let's say 10 years, and starting with the production in like 4 or 5 months, we can play a little bit with the numbers and decrease the output a little bit more.
Yeah, I think 6 months to get it started. When he gets when we raise the money, he gets the money. Then we get like killed with the conversion rate, like 3% or 4%, something like this. And then also we get killed again when we get the money back. So we need to see. But maybe the best way is like we take the good and market and sell it internationally. So then we But I know Nigeria, there is like export permit and shit like this, so maybe we don't want to do that. We want to let him sell locally as fast as possible, and then keep it running. So
and costs will increase heavily when we export, when we increase the share. But again, this is another calculation. So we have to see, is it linear, so to say? Okay, so prices are increasing per 10% more export share, or is there something like costs are decreasing, but revenue is increasing even heavier? So this would make sense to have a greater export share just in the numbers. Of course, like the things you mentioned, we have to take into consideration, but. We could do like 2 or 3 scenarios.
Yes. The thing is, I really like when it's operationally easy. So there is like less fucked up. So this is
no headache.
Yes, exactly. The question: so how will you manage the investment? Will you go down on monthly, quarterly basis? So this is an extremely good question, Timothy. And so this is I don't know yet. I don't know, to be honest. I don't know yet. I have some people that I really trust in Nigeria that could manage it, but I need to just make it. See how it works and so on. So, and the guy there is the owner of the project, is quite an important person there. Is quite an important reputation also internationally and so on. So I think he's trustworthy, but still we need to make sure that everything goes. So maybe we need to pay a guy that just sit on the mine and do nothing and just watch what is going on. So I think this is what we are going to do. But still, and also how we are going to secure our investment. So I'm pretty sure that we are going to ask for the permit in as a collateral. So basically, if the guy focus, then we get the mine. I mean, this is theoretically how it should happen, but in reality, this is more complex than that. But this is maybe one way, and also we'll ask him to put, I don't know, like if he has a house or something like this. Maybe not, but we'll see. But yeah, I mean, the name of the game is this. This is the issue is really what is going on the side once you have sent the money. So Michaela said, where would be your customer? The demand. Okay, the customer is not really an issue. I mean, when there is like a lot of people that buy and export, a lot of exporters, so it's never really an issue with the customer side. How did you find this miner? So this one, it's basically I've got a good friend in Nigeria, and as he knew that I was I actually saw my video on the Chrome mine, and he said like, look, you need to meet this guy. I know that he has a mine and so on. So this is how it came to me. You said something like artisanal mining. Yes. So the mine was being exploited as with artisanal miners. So with no mechanics, just pick and shovel. So as you can imagine, this is awful. So if you can make something better out of that, this will be for the good of everyone. Gary Nagel. So did you something like a SWOT analysis or make? Okay, Jude. So SWOT analysis, like I don't know if you see that, but no, I mean this is we don't do shit like this. I mean, so it's maybe if you pay a consultant, he's going to do that for you. But I mean, what when you deal with
will definitely.
Yeah, he will definitely pay.
Porter 5 forces and everything.
Yeah.
and then 5,000 euros.
Yeah, exactly. So so those analyses. I mean, there is like no competitive analysis to make. So the only question that you need to ask is the cost of production. What are your cost of production compared to the market price, and that's it. And of course, you can say, okay, like maybe the diesel is going up. I mean, the cost of production can go up, the market price can go down, but that's it. In terms of commodity, you don't care about really the competitive analysis and so on. And especially with a small project like this, because we are not going to hurt the market if we are successful. It's not like we are going to build a huge mine which is going to supply 2-3% of the annual volume of needed for the world. So no problem with that. So no, we don't do those type of analysis.
And there's huge demand for lithium, so there shouldn't be a problem to find a buyer. And it's one of the only metals, or let's say commodities currently, that is quite stable or has lost like 40%.
Yeah, compared to the other one. So So lithium, and also it's I don't remember the name of lithium. There's like 2 types of lithium that you can mine. This is the worst one, but still, I'm convinced that this is not really an issue. So any other thing that you want to add, Leon? And then
No.
okay,
No.
cool. So guys, if you have like any other questions, even if this is not about this mind, but this is any other type of culture, just you can just type in the chat. And then Leon, the other thing that we need to discuss, but this is maybe for tomorrow, about the Chrome mine, how it's going. We are going to do that tomorrow. And how this one when would you be able to go to Nigeria?
Tomorrow, I think.
No, but if we make it happen, I mean, it's not going to be today, but when do you have time? Would you have time?
Next month would be perfect. Yeah.
What does it mean? Mid-September?
Yeah, mid-September. Yeah, that should be perfect.
Yeah, I think we just need like to be there like for 3 days or something like this. So we'll see. And there is also I'm also working with a guy to promote the Shipping and Commodity Academy in Nigeria. And true story. And so he said like maybe after the promotion I could go there to give like a talk or something like this. I mean, why not? So I mean, we'll see how fast this project is going. But now this is election in Nigeria, so it's like tumultuous time. But we'll see how it goes in the future. And then a second point, Leon. So if we need to raise money for that mine, how difficult do you think it's going to be?
It will be very difficult. It depends on the database we have. It depends on the investors of us and of their appetite for risk. But I think with Lithium, people are a little bit more open to listen to us. So it's not 100,000, which should be easy, but it will be much more, especially with 4 months without revenue.
Yeah, I think it's like 500,000 or no, maybe lower than that, but like there's more money. But also the project owner has money and people that want to invest, so we need to see how we can structure it. So it sounds interesting that I don't know if we can pull the trigger to be between us. It's going to be how we can structure the deal, and also how we can monitor the deal on the ground. So that's the part that I'm the most I'm a bit tricky. So and maybe we can do like a really small ticket. We said to the guy, look, cool man, thanks a lot, but we can only put like 100K or I don't know 50K,
20%, something.
Something like small, and we can follow you on that. And you pay us, like, every 6 months or something like this. So maybe
we will have to figure out.
Yes. But that's okay. Cool, man. So guys, I think